Hi, I'm Sandy Ray, founder of Sandra E. Ray CPA, where we alleviate financial headaches so that you can create a bigger impact. Today, we are tackling the One Big Beautiful Bill Act of 2025, and there's no way we can tackle the whole thing in 10 minutes. So we're going to focus on what employers and nonprofits need to know about the new no tax rules for tips and overtime. Now, I've put some links in the comment section and the description of our talk today. I'll go over what those are as we go through the talk. But I just wanted to start by saying that these are the two big headline provisions of the Act and affect millions of American workers in for-profit and not-for-profit organizations. And those are no tax on tips and no tax on overtime. Now, the IRS and the Treasury has been releasing guidance. I wanted to bring you up to date on that. They're not completely done, and I'll let you know what's still coming down the road. But we want to talk about how we're going to calculate these deductions, how employees will calculate these deductions, and what information that you may provide to your employees to help them in that activity. So just a little history. Back in July, the One Big Beautiful Bill Act was passed, and it had several taxpayer provisions. But again, the two big ones were no tax on tips, which provided a deduction of $25,000 per year for tipped employees, and no tax on overtime, which was designed to reduce the overtime premium portion of a person's payroll. So these provisions apply to 2025 and go through tax years 2028 unless Congress decides to extend them. They will expire. Now, the guidance that will help us a little bit in understanding these. Some important points is these are deductions that are claimed on the employee's personal income tax return on their 1040, and that these deductions are above the line deductions, meaning that employees are eligible for these no matter if they itemize or they use the standard deduction. So you're going to have like your gross income, you're going to have the deduction for no tax, no overtime, and then you're going to have your standard or your itemized deduction to calculate your taxable income. Now, the IRS did not have time to update any forms like W-2 or 1099. So for 2025, those will not be updated. So you're not going to have boxes that tell you how much was tips or how much was overtime. I don't know if you're working with your payroll service now to be able to identify that and maybe report it in box 14, but there are no new boxes for that information for this year. So while the employee is responsible for calculating the amounts for their deduction, they may be looking to you to help them identify how much was reported for tips and how much overtime they did receive. So I wanted to let you know also that the IRS has provided example worksheets and instructions. There's going to be instructions in the 1040 instructions on how to calculate this. But right now you can go to the IRS Notice 2025-69 that has examples there. And then I've provided a link to the bigbeautifulcalculator.com. I tested it out, and you put in your wages, your tips, and your overtime premium, and it will show you the tax savings from using those deductions. Now, currently, employers are not required to categorize overtime or tip income on the year-end forms in any way, and that's going to be true for 2025, looking at W-2s and 1099s. The IRS forms and instructions are still being updated for the Form 1040 for the filing season. We expect filing season to start in late January, but the actual start date has not been announced by the IRS yet. So now let's get into some of the specifics of each deduction. So let's tackle the tipped income deduction first. In nonprofits, we typically don't have a lot of tipped employees, but we could, depending upon what you're doing for your organization. I just wanted to go over that. We want to talk about who qualifies for this deduction, and that's going to be any worker who receives tips, including restaurant servers, bartenders, hotel service staff, salon and personal service workers, and other tipped occupations. And the IRS estimates that there's going to be 6 million workers that receive tips in the US. Now, the deduction that the employee can take on their personal tax return is a deduction of those tips up to $25,000 per year. And the deduction, again, is not an exclusion, it's a deduction. It means it reduces your taxable income. So you have to report it in your gross income and then you can deduct it out. And then again, it's available whether you itemize or use the standard deduction. Now, there are some phase outs, beginning with single filers. If your modified adjusted gross income is $150,000 or more, that deduction is going to start to be phased out. And as the income increases, it will be completely phased out. Now, for married filing jointly, that phase out begins at $300,000. And again, this deduction is available for tax years 2025 through 2028. And because the W-2s won't show tips separately, workers are going to have to refer to the instructions on their 1040 to calculate the deductible portion from their wages. And again, they may need some information from you to help them do that. Now I want to talk about the overtime income deduction. I think it's going to affect more of our nonprofit organizations. I want to clarify that this deduction is only on the portion that's the overtime premium. So for example, say someone gets time and a half for overtime and their regular hourly rate is $20 an hour. Their overtime rate is $30 an hour. The difference between the $30 and the $20, $10, is the overtime premium. And that is the amount that is qualified for the deduction, which is, it's just that premium amount. Overtime must be paid and reported on the W-2. That's no change. All overtime is always reported in the wage boxes on the W-2 or 1099 or other similar statement. It applies to both hourly and certain non-salaried workers. And the deduction for this overtime premium is up to $12,500 for single filer or $25,000 for joint filers. And again, this is an above the line deduction. It's available for filers who itemize or use the standard deduction. And this deduction also has phase outs at the same levels. With modified adjusted gross income for single filers, it's $150,000 where the phase out begins, and $300,000 for joint filers. People who are not eligible for the overtime deduction are the workers who are exempt from overtime under FLSA. Now, this includes salaried employees making $1,128 per week in 2025 or $58,656 per year or more. It also excludes specific occupational categories as administrative, executive, or professional. For all other taxpayers, this deduction could significantly reduce their taxable income, especially for employees who rely heavily on overtime to boost their earnings. So the key takeaways that I would like you to take from this very short overview of those two deductions is no tax on tips and no tax on overtime are now the law, and it starts this year. The IRS forms won't show these items separately for this year, so workers are going to have to calculate the deductions themselves using IRS worksheets. The tip deduction is up to $25,000 per year, with phase outs at $150,000 from single filers and $300,000 for married filing joint. The overtime deduction covers the overtime premium portion only and is deductible up to $12,500 for single, $25,000 for married filing jointly. Both deductions are above the line, so it doesn't matter if you use a standard deduction or itemized deductions, you will still get this deduction on your tax return. The IRS is still in the process of updating the 1040 and the instructions for 1040 for the filing season, and the start date for that has not yet been set. in that both of these deductions apply to 2025 through 2028. Now, in addition to the calculator, I've put in a link to the fact sheet put out by the IRS for deductions for working Americans and seniors. And that link is in the comment section. And I've also put a link to the IRS guidance for individuals who receive tips and overtime during tax year 2025. So what I'd like you to take away from this is to make sure that your payroll system can provide the information that your employees are going to need to take these deductions. You may want to subscribe to the IRS updates so that you know when the worksheets and the new instructions are released. And first and foremost, probably don't give tax advice to your employees. Please recommend that they seek professional advice from their tax consultant to figure out how these deductions affect their entire tax situation. You don't want to be giving advice with just the little piece of information that you have. It could be detrimental to the employee. So I hope this was helpful. And if you have any questions on this or other topics, please put those in the comment section below. We always appreciate your likes. And I want to thank you for joining me today. Remember, creating a bigger impact starts with stopping the nonsense. If you're dealing with nonsense in your nonprofit organization, we'd love to help you cut through the noise.